All right, traders. So in this lesson, we're going to expand a little bit on not only identifying directional market movement, but again, we want to walk back through tendencies. And again, I really want you to grasp that. It's so critical in your trading development as you move forward, regardless if you've been around for 10 days, 10 months, 10 years, doesn't matter. It's an if-then thought process and its tendencies. What do the markets tend to do when this happens on the charts? And that this could be an indicator based, or it could be price action based, or it could be a combination of the two. Now, one of the directional moves looked at and discussed yesterday was right here. So in the past, over the past 2.5 decades, I've been teaching traders about the power of relative strength. I've used RSI in a ton of different trading ideas, thought processes, and strategies. Right here, we happen to be looking at an RSI 5. So let's give each of these, price action and the RSI 5, equal chart time. All right, so one of the things that you want to note, yesterday the discussion was about areas of overbought and oversold conditions. And part of the thought process was combining that information. So number one, it's let's look at the power of market structure. And then we want to use that with, in this case, an indicator, relative strength. Okay? So when we looked at tendencies, one of the tendencies that was noted in the prior session was right here. So we look at things that happen in the markets. And as a counter trend trader, we want to find out, identify turning points. Okay, so turning points in the market, we've discussed these in the past. We got a V-top or bottom. We got a double top or bottom. And then we've got a triple top or bottom. So here we note a triple top. We see a test right here with a massive impulse move right here. That takes us to an ISM or an ISH, an initial structure high. Okay, then we make a new structure high, higher close. And yet as we make a higher high in price action right here, you'll note that already the relative strength index, the RSI, is starting to show bearish divergence. So make sure that you get those two down. One of the biggest challenges I've had with clients in the past is the communication of that information. So what do I mean? If it's a bear divergence, bear equals sell. We're looking for short opportunities. If it's a bull divergence, bear or bullish is buy. We're looking to get long. Okay? And again, remember, this is all about repetition. Really, really critical. And a couple of things, gang, as well. When you're starting out in trading, or regardless of where you are, you're here because at some level you're probably struggling. Bottom line, you have to get these things solid, whether it's these rules of engagement or another set that you use, moving averages, it doesn't matter. A, your associations. Remember, what do I see? What does it mean? What do I do? B, one of the ways to do that is through constant repetition. You've got to believe that you can make money as a trader before you can actually make money as a trader. Okay? So when we look at this, we start to see, okay, there's an extreme overbought condition. That's RSI 5 that is greater than 80. In this case, it goes to 92. And you'll note it's the highest RSI reading over the past week and a half. All right, great, love it. But we're not at market structure. That horizontal line right there represents a previous swing high in the market where traders came in. What's the context? What took place at that level? Where traders came in and sold this market off. So as we reach that level right here, that's where we start to build that strength of signal, which is what the SOS stands for. So this indicator alerts me to an extreme reading. It's simple, but it's powerful. Now I can see right there the SOS alert pops up. Am I ready to act on this bar? I'm not, because I can't build a significant enough strength of signal. Price hasn't reached my resistance point. However, with each new structure high in price, I've got a lower reading on the RSI. So when we get our final test right here, and then we get a 2-bar reversal right here, you'll note again RSI is lower than it was previously. So it kind of looks like this. Whoops. Well, it's not as good to use as this bad boy right there. So the final double top right there showed nice symmetry. We showed about the same number of bars down to the swing low that exists in the middle of the double top, about the same number of bars back up. And again, we were overbought here, bearish divergence here. So we tend to have bearish divergence with some type of a visual price pattern, double top, triple top, or a V top. The double top and the triple top are more prevalent right at those turning points. So those two things come into play. Now what happens? What tends to happen next? Well, first and foremost, we've got a significant swing low set in right here. Now, remember, what we want to do is we want to remove emotions. We want to remove subjectivity. How do we do that? Remove emotions? Maybe not remove them, but we certainly have to know how to manage them. The way we manage emotions is having a rules-based system that we've tested historically, so we've arrived at a belief system that this provides us with some type of an edge. Typically, we're going to be able to have a risk-reward ratio on a trade that's 1-to-1, but we win 65–70% of the trades. Number two, we could have a risk-reward ratio where we risk 1 unit, 100 pips, to make 2 units, 200 pips. And then we can have a 55% win ratio and still make money. The way to gather that or to gain that confidence is through testing. So we see that we have a turning point right here. We have a strength of signal 5 sell. And then what tends to happen next? Once we break the swing low right here, let's pull this down. Previous structure support, once broken, tends to become resistance. And there the market rolls over. Now at this point, yesterday you noted the RSI achieved an oversold condition here. You'll note that we put in a double bottom right here. Let's identify it. And we had a higher close on the right-hand side. We didn't have a key level right there, so again, that would be aggressive at best. However, we did rally back up to this level where we put in a triple top. We had bearish divergence, but we did not reach an RSI extreme. So we know what the RSI tends to do when we're basically oscillating inside of a trading channel. So let's look. Do you see any channels present here? Here's one. Once we broke out, we had a trend here, and then we identify another trading channel. And then once we broke out here, we produce another trading channel. So remember, technically speaking, the statistical analysis has been done historically. Markets chop and move sideways 60 to 70% of the time or more. And Forex tends to be the better trender, but as you'll note right here, it tends to happen in short pops. When we do get a nice long trend, now let's take a look at what happens. Here we have a bear move right there. RSI buries itself and we meet the lowest RSI reading over the past 3 weeks. Okay, that coincides with this structure support level. So what I did was I said I want to identify significant swing points in the market where two things are present. Okay, and one of those things is I want a swing ID to have occurred in the last X number of bars. Now, for example, if we set a swing strength to 5, that means that we have to have 5 lower highs to the left and 5 lower highs to the right in order to produce a swing high. I'll show you that in a second. Number 2, I want to have met an RSI extreme at the same time this occurred, and then I had to put in a fudge factor on the RSI. So I said, okay, if that RSI extreme has hit in the last X number of bars, then I want you to alert me. I want you to alert me via an audible tone. I want a visual on the chart so I can be prepared for that in an upcoming session or as the market tests it. All right, so let's take a look at a swing high or a swing low. Let's go in here. Every charting package will have these swing indicators. So I'm just going to go grab a general swing. Yeah, on your side it'll be, Ninja Trader has it as just a swing. And you'll note the swing strength is set to 3. Now, you'll note that my swing high is set to black. My swing lows are set to green. So I want you to first note what a swing high, swing low looks like at a 3. And obviously a base theory here is the smaller our swing strength, the more swings we're going to have, and more than likely the less relevant they'll be. There'll be swings all over the place. Let's start with the 3. Okay, so it returns the value. Here's a swing low with a 3-period swing strength, followed by 2, 3, 4, 5, and 6. So we have 6 swing points set right there, and all those swings occur within about 20 pips of each other, or even 15 pips of each other, and they occur right at the market support. We broke below the swing low here, made a new structure low, closed right back up here, retested that swing again here, retested that swing again here. So when we're in a sideways channel, we recognize a tendency. What does the market tend to do? Well, so let's just do this. Let's say from our initial swing low, if we create a 10-tick zone around that, then we don't pay attention to any directional moves until we break above or break below that particular swing point. Okay, so let's take our swing strength just for the purpose of the visuals here. So I'm going to move it up to 5. That's the next Fibonacci sequence number. And you'll note we go from 1, 2, 3, 4, 5, 6 swings inside of this box. Left click apply. We go down to 1, 2, 3, 4. Okay, we have fewer swings. Now let's go from 5 up to 8. So again, we're moving up the Fibonacci sequence levels. We're going 3, then 5, then 8. The higher the number in your swing strength, the fewer swings you're going to have. 1, 2, 3, 4, and above we have a swing point here, 2, 3. Okay, left click apply. Now we lose 1 on the bottom. This no longer qualifies as a swing because, let's take a look. In order for this indicator to generate a swing, we need, in this case, 8 to the left and 8 to the right. So if I want to swing low and I have it set to 8, I need 8 lower, or actually let's say this, higher lows to the left, and then 8 higher lows to the right. So it's basically a 16-bar pattern that has to be produced in order to generate that. So let's look a little more closely at what we've got right here. Okay, so we'll grab this guy. Okay, so let's take the swing low right here. To the left of it, we have a higher low 1, 2, 3, 4, 5, 6, 7, 8. So at that point right there, we have 8 higher lows to the left. In other words, this is the lowest low in the most recent 8 bars down. Nailed it. But I can't plot it yet. Now I need 8 higher lows to the right side of it. It's got to be the lowest swing point over the last 16 bars of data. So on the right side, I've got bar number 1. A swing 8 will not plot here. Higher low 2, 3, 4, 5. It won't plot here. 6, 7, 8. It's at the close of that candle right there where our criteria have been met. We have the swing low with 8 higher lows to the left, the swing low with 8 higher lows to the right. At that point, this swing low will print. Very critical. Back in the day, trading prop rooms, one of the things we ran into was traders using a swing for their trail stop and then doing historical testing. Well, when I go back and look at this historically, it shows that that was the swing low, but remember, it would not have been the swing low until 8 higher lows presented themselves closed on the right side. Okay, now, here we have an 8-period swing low. Do I have a corresponding oversold condition? I do not. Here I have an 8-period swing low. Do I have a corresponding oversold condition? I do kind of. This guy right here hit 1976, it looks like. Could have been 2033. Now you'll note my indicator produced an SOS. Bottom line is, as we come down here, I'm oversold. And as we make lower lows in price, pressing back down to this swing low, which would have been present, I have bullish divergence. So here I could have started to look for a qualified buy signal. Okay, now let's look at our swing high. This one's simple. Again, let's look right here or right here. There's my swing high. If it's a swing high, I need 8 lower highs to the left. 1, 2, 3, 4, 5, 6, 7, 8. Although this high is higher than that one, it's still lower than the primary swing point. So the swing high is in. Now I need 1, 2, 3, 4, 5, 6, 7, 8 lower highs to the right in order for that to present. So this guy started plotting at the close of that 8th candle. In other words, it would have been here at this time. Same way here, same way here, same way here. Okay? All right, so what we wanted to do is we wanted to, again, look for those tendencies. So let's go back into our swing indicator, and now let's apply it a second time. So again, I'm just going to apply the same swing. And I wanted to be aware of 2 different swing points. So I'm going to set this one to 5, and I'm going to set another one for 13. So the one that I call 13, I'm going to call that my swing major, and I'm going to make that one black and black. So I know that my black swing highs and lows are major swing points. In this case, made up of the 13. Okay? I'm going to take my lawn green right here, and these guys are going to be set to 5. Okay, we'll left click OK. Must have to be capitalized. Let's go down and grab lawn green. There we go. Boom and boom. All right, now we have both of them on the chart. Now let me remove this, and you'll note something right here. Okay, I've got a swing high, and this is a HTF swing or a swing major. So let's identify them. Black is swing major, and that one is set to 13. So remember, that's going to be a 26 bar pattern. Okay, and then lawn green, or let's just say green, is swing minor, and I've got that one set to 5. So this is going to identify my minor swing points, the other one my major. All right, now let's start to take a look at some tendencies with this in mind. I have a swing major here. We pull down to a swing major here. We pop back up. We almost test the swing major here, and now I have 2 of them that occur. 68.72 is one, 68.63 is another. Those 2 swing majors are put in within 10 ticks of each other. So now I have a little area of confluence right here. Okay? Now, this, I would anticipate, can be a pretty significant zone. This is what we'd look at as well on a higher time frame versus a trading time frame. So let's say I'm pulling in a swing from a 480-minute chart, and I'm putting it on my trading time frame. Now, you'll note at the bottom, we have 3 consecutive here to here, and then we have a swing major that's set up over here on the right side. So in a period of no directional movement, where the market rolls sideways, we had an impulse momentum move that drove us into this zone, and then we just ping-ponged through support and resistance. Now remember, the swing point over here wasn't present until the market pulled back down here. So now as the market rallies back up, I've got a swing level here that I can consider trading from. And remember, if I'm looking to sell up here, then I am a counter trend trader. I'm trading counter to the underlying trend. If, however, I look for a 2-bar reversal or I buy a pullback into a swing low, now I'm buying with trend. I want to cover half here on a retest of the swing highs and then let the balance run. If I buy here on a pullback, then I'm buying with trend. I want to cover half here and let the balance run. So as we pull back down, we can look for oversold conditions in a bull market. We can also identify sideways trading channels. Now, you'll note right here, trend and market contraction right here tends to lead to market expansion, which is what we see right here. The market expands. It looks like more than likely a news event. That's 1 p.m. in the afternoon to 2 p.m. on a 60-minute bar. No idea what occurred, but visually that bar right there is about 5 times the average true range of other bars. Highly unlikely we would catch anything right here. But then you'll see almost immediately the market goes right back to doing what it loves to do, going sideways. And again, here we go overbought, bearish divergence, double top. This time we met a key resistance zone. We pull back down. We want to cover half of the short entry here. And now we start to take off. Now you see I've got a swing ID here. I've got a swing ID here. So you'll note one of the ways that we can do this is we can take our indicator, and when we apply it to the same chart, and we'll go solid here. So you can see we've got a swing 13 here and a swing 5. So we've got a higher time frame swing with a lower time frame swing. Look what happens when that swing support level gives way. Okay, so in this market, we get a trade below, close below. Our RSI is buried at the lowest low, so relative strength is confirming this sell-off. And once we break below that level, we get an immediate direction move of 120 pips. It takes place over the next 20 hours, 20 60-minute bars with one little 1, 2, 3, 4, 5, 6, 7, 8 hour pause. We start the pause right there at 3 a.m. London session through 10 a.m. the end of the New York session, and then we get the continuation rollover. So we trend for this amount of time, and then we pull right back into a sideways trade. All right, so what I would suggest, let's tighten this chart up. Here's what we looked at yesterday. This is where your training closed out yesterday, was the impulse to this new structure high. RSI was overbought here as we rolled through our last swing point. Remember, this is a swing minor. That's the swing setting set to 5. We roll up to and stop right at the swing major. That's the swing minor of 5, meeting a swing major 13, and we double top right at that swing major within 5 pips. We go overbought, higher low, bearish divergence, put in a double top, market structure with bearish divergence, and we've got a swing low right here. So a couple of ways to take action. Number 1, trade the double top or double bottom. And remember here, gang, the right side is the signal side. Number 2, I called this trade the favorable excursion trade. And this is more of a failure trade. Okay? When the momentum behind the bull move, in this case, fails, what tends to happen? Well, the market will come back down. It'll trade through this level and roll over. Look what we saw right over here. Right there. There's a 5 and 13 combo. And you'll note that it extended. We came down to it. We got a clear close below it. And then we accelerated as the sellers jumped on board the short train. And again, in this particular case, it's what I call a no-pain train. Big momentum behind that led again to 120 pips. Now, if we sold them right here and we put our stop right here, then we've got a risk about 50. Let's take a look. We want back-to-back closes below as an example. Our stop is at 50. If we use a 2 times target, we made our 100 pips right there, and now we're done and dusted, unless you want to stay on and look to participate in a bigger directional move. So, a previous swing low where we had the combined swing points, a major and a minor, when that gives way, what happens next? Tendency. What does the market tend to do? Same thing here. You see we press lower, there's a swing. We pull right back up to that prior swing high. Here, let's expand the chart. Now we're in a bear continuation pattern. Then you looked at this particular occurrence. Now, is that a symmetrical double top? Yes, it's gorgeous. Swing high, 2, 3 bars down to the swing low, 1, 2, 3 bars back up. It's a great little 5 or 6 bar pattern. Easy to recognize. We did not quite get overbought right there. We do, however, have bearish divergence on the retest on the right side. So the previous sell that we looked at was counter trend. This one now is trading with trend. We're in a bear continuation pattern. There's the impulse, lower high, new structure low, lower high test. Look left, that's a 13-period swing. These only disappear when either A, they're broken with a close above or below, or B, we get a new swing higher low right here. And again, I want you to recognize this tendency. When they start to stack on top of each other right there, it's because the market is in a non-trending mode. We go up, we have 5 and 13 lower highs to the left and to the right. We break below, we can't sustain a held trade below, we pop back up. And again, that's 66 to 72. This is only 6 pips. From this low right here, 44, we've moved down to 30, then right back up. Okay, then when we break above, like we did right here, break above, close above, what tends to happen next? Sideways trade. And then that brings us right back again. Look left, structure leaves clues. Use your rectangle. There's a 13-5 stack, a major minor stack. Here's a major minor stack here, here, here. See how you can trade those sideways markets when you properly identify that the market's in a sideways trading channel. Now, could I trade this stack? Absolutely not. Could I trade this one? Absolutely. Because I've got a 5 here, a 513 here, we pull right down to within 2 pips of that, and as we get there, notice here, I've got bullish divergence. So, we go oversold here, thus you see the SOS on the chart right there. That alerts me, prepare for a trade. Then we make new structure lows right here, and we've got bullish divergence on the RSI right there. Okay, then we pop back up. This swing high right here is 68.93. That close is 90. We come right to 87. And again, what happens? We roll over. Can we trade this one? We can. This guy right here rolls over. We make new structure lows and then pop right here. Now, this is pretty uncommon, where we see the market press to a new structure low with an extreme RSI, and then we get a full rotation. Here's a new structure low. We double bottomed, triple bottomed with bullish divergence before we headed north. Here's a new structure low, and then this is what I call a full rotation on the oscillator. We go from extreme oversold in one shot straight north to extreme overbought right here. Then we go bearish divergence as we make lower highs, and then we finally bang right into, look left, structure leaves clues, and there it is, the double top. So here we had no retracements. We didn't put in a swing low of a 3-bar swing low. This guy right here would have been a 3-bar swing low. So when we get big directional moves, you'll note what happens. When we're in a really strong trend, we don't produce a swing minor or a swing major. Okay? So two things to kind of help you highlight and quickly and objectively determine, are we trending or not? Okay, here, symmetrical double top. We talked about trading the double top. The right side of the double top is the buy or sell side. That's the signal side. We go overbought, higher low, retest, bearish divergence. There's a doji with a lower close. Any of these right here will work on the right side. If I get short over here, I have to place my stop. Let's just go here, 26 pips. 2-to-1 risk reward. It makes sense that we would at least come down and retest the structure right over here. Previous support, once broken, anticipated resistance. Here we traded right through it because of that momentum. But you see, gang, you can easily produce a 1-to-2 risk profile there. If you choose not to trade that way, then you might want something that's a little more, provides a little more confirmation. There's always going to be a swing point between the double tops. In this case, you'll note I've got a swing minor, swing minor, swing minor. Here we pull back down on that candle and retest that swing minor. So I can look for a close below this, and I call that the favorable excursion trade. Because I noted historically that when markets move and when they change direction, they tend to rally hard into a zone, and then typically with a confluence of an overbought higher low bearish divergence with an oscillator, they will V-top, double top, or triple top. And this is indicating there's a possibility of a trend change, even if it's a minor trend change. All of these double tops have the exact same technical look. They have a left side, they have a right side, and they have a swing low between each of them. Okay, so again, there's the visual price pattern. We add to it an RSI or a stochastic or a MACD or whatever you want to look at, an oscillator. The left side short entry is aggressive. The right side more conservative. More conditions are in your favor. Thus, they get a higher SOS reading. And then if I want to use a momentum play, I can simply sell a break below this swing point right here. What does that look like? Okay, let's just walk forward. Remember, what does an RSI tell us? It's relative strength. This tells us the relative bullish strength as this market rallies. We hit this area, it's lower than it was all the way over here. Now, it doesn't mean this market's going to turn. So I could sell it right here, we could pull back down here, and then boom, launch and go straight north, and I'd be stopped out. Or we can wait for either A, we can take this low, subtract 10 pips, and rest a sell stop right there. That's what I call the chop stop entry. Okay? So take the swing point low, and then minus 10 pips as an example. That's called the favorable excursion. In historical testing, we always look at the maximum favorable excursion. So if I'm short right here, a favorable excursion for sellers is a move lower. So as it makes the move through that swing point, and that swing point fails at some level, I anticipate more sellers, more sellers, more sellers to jump on that sell side trade. And I anticipate that the selling momentum will increase. So let's left click F. We'll look left over here. This would be a reasonable extended target for that move. This area right here would be a reasonable target 1 for that move. Why? Look left. Support once, twice, 3 times a lady. Gave way, then took it out. Okay. If we take the value of the level, in this case, 68.71 minus 10 would be 61. Place our sell stop right there. Our sell stop's elected. Risk 25 to make 50. Risk 30 to make 60. Risk 40 to make 80. Market sells off, and you can see right now, again, from that sell point right here, market heads straight south. Now, let's come back in here and let's remove all the drawing tools. Now you've got basically a naked chart. So here's what I'd encourage you to do immediately. Go out to your higher time frames, or just go to your trading time frame. And I'd say use a 60-minute at the minimum. Okay? Set your swing points. I'm going to suggest 2 Fibonacci sequence numbers. So I'm going to say your swing minor, set that one to 5. Set your swing major to 13. Make sure that you color them differently so that you can see. And then the other thing you're going to want to do is, if you make one of them thicker, I would say make the black one thicker so it can show through, and that way you can tell when you've got a 5 on top of a 13, and those tend to be really significant swings. So as we look left, right here, again, there's a major, here's a minor, and then here is a major stacked with a minor right there. So I've got a swing 3 here, swing minor here, swing major here, swing minor here. And for those of you that are familiar with patterns, you'll note that this is a little bit of a bear pennant. Now, it's not quite as good as I'd like to see. This move right here failed at the highs, rolled over, new structure low, and then we build our pennant right here, our bear flag, before rolling over. Typically, these bear flags will be more at the bottom part of a bear move, but it's a beautiful failure pattern. More importantly, see right here, that is a swing major with a swing minor. Again, what happens when we break below, close below? Acceleration. And then after we accelerate, what happens? We consolidate. Market expansion leads to market contraction. Market expansion leads to contraction. And this higher time frame will allow you to identify very quickly what's going on in the market. Are we range bound or trend following? And then we can look at what type of action to take. So you'll note right here, we popped. We had the the swing minor with the swing major. You got to look at selling those if you're a counter trend trader. But make sure you go through your rules of engagement. If you don't like that, take that swing 5 that exists between the double top and then look for this momentum sell. See this? Swing major, minor, stack. So there's a stacked swing point right there. So what I did was I put all this together and then built this guy out for higher time frames. And you can see the significance. Boom, boom, double top test right there, stopped on a dime. Swing low right there, stopped on a dime. Swing low right here, back into the swing point. And I can take these dailies and we can put them on our trading time frames as well. So as you go through the ascension and become more adept at this visualization and these swings, now you can say, what about when I have a swing point right here where I have an extreme RSI? You can also take your RSI and you can make that RSI, you can increase the criteria. Okay, so instead of the RSI set to a 5 period, you can take that RSI and set it to a 7 or 8. Let's go 7 period RSI, left click apply. Was the RSI oversold at that swing low? Not quite. Was it oversold here? Now I may want to look for an RSI overbought near a major swing. So there's a swing major. My 7 period goes overbought. Take the lowest low right here and place a sell stop below it and look for failure. Okay. Here's an RSI overbought. Boom, right here. Take a swing point, look for failure. Go back in and walk through this and test 20 occurrences on the buy side, 20 occurrences on the sell side. And when you look at your stop placement, look at this. Stop equals 2 ATR for that particular chart. And again, I always use an ATR 7 as a default unless otherwise stated. Target 1 equals 2 ATR. Target 2 equals 2 times that, or 4 ATR. You're going to have a higher win rate on your scalper. You're going to have a lower win rate on your trader, your 4 ATR target, or your 2R. But it's highly likely that that second one will produce more net profit overall. Okay, gang. How's that working for you? Go ahead, hit me in the chat with any questions, comments. Pop a 10 in there if it makes sense to you. And the building on that strength of signal and the swing points using that RSI to help identify strengths. 10 from Alex. I love it. Perfect. Thank you, Dave. Okay. Any questions? You see how you can come over and quickly identify. Let's take this chart right here as an example. Let's take this guy right here, and let's just go out to 120-minute chart and just glance at it. Look how this price accumulates near this level. So as soon as you got your 13 period and that guy starts to plot, look how you can easily sell that retest right over here. It just screams support and resistance. Look right here. See the accumulation near these lows? Yeah, and then wait until you get really tight right here. Wait until you get bullish divergence, and then place a buy stop above that horizontal channel. Look at the failure point right here. And then once we fail, we pull right back to it. Now remember, when you go back and do your historical testing, make sure that your 13-bar rule is in play. Dave, do you use the 60-minute chart as the minimum time frame for trading? Not necessarily. I actually built these indicators so we could go look at the indicator from a higher time frame. Okay, so let's do this. Let's say that we identify a key swing point. Now, obviously, we're going to use the benefit of back testing, but we're going to take, let's do this. Let's take the rectangle. Okay. We have our swing set up right here already. So I'm going to draw the swing point in based on the swing major and minor that overlap right here. Now, we're going to act as if that swing point was there. Okay. In Ninja, I can double left click on this, and then I can say attach to all charts. Let me see. There it is. Okay, so I can leave it there, and that will appear on every New Zealand USD that I've got. I can also take the current chart once we've set it in and just go down to a 5-minute. And then all I'm looking for at this point, gang, is an extreme reading with a qualified trade signal at or near that zone. So see the 5-minute chart right here? Price pops up into the zone right here. Look at this. Here's overbought, higher low, bearish divergence. Look left right into that zone. Sell them. Now remember, if I'm going to swing trade intraday, I can use a 5-minute to hone my entries. So Dave, let's go look at a 15-minute as an example. See that 15-minute? See this beautiful opportunity over here on the right side? And again, in previous trainings, I've talked about perfect symmetry. Note the symmetry right there. Okay, So we're pulling this in from 120 minute. We see it on the 60 minute. So we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars down to the swing low. 2, 3, 4, 5, 6, 7, 8, 9, 9 bars back up. So that's a 12 by 9 pattern or a 21 bar. Our price symmetry is perfect. Literally, we come right here on the right side of the double top to within 1 pip. Our time symmetry is almost perfect. 12 bars down, 9 bars back up. And then what happens? We get a lower close, bearish engulfing on the right side. If we sell the next bar market, this is at 7:15 at night. So I'd have to be in front of my charts. I'd have to know what market is near what area. And then I could look at this level and say, okay, get short. And look, I've got 1, 2, 3, 4, 5 candles right there. Each of them 15 minutes in length or 75 minutes where I could have gotten in on this trade within a 5 pip trading range. So we sell them here at 95. Let's say we cover half of them here at 72. There's plus 20. And then just let the balance run. Okay, you wake up the next morning. You're up 50 to 60 pips in the trade. You can trail your stops, let them run, make whatever decision. So that's one of the ways that you can do it. Now, the upside to these smaller trading time frames is that the high to low to high range in these bars, that's basically 69 to 68.83. So let's call this a 20 pip range. The higher time frame, the bigger these bars are going to be. Okay, 69 down to 72, it's a 30 pip range. If we went to the 120 minute and so on. So there are ways that you can use that, and we'll get deeper into that as we move forward. I don't want to overwhelm you, but yeah, that's a great question. Yeah, and again, gang, remember, you want to pull in. Yeah, see this? Look at it. Boom, sideways trading channel. And then a pop. So be sure to email me with any questions. And also, I want to learn about your tendencies. Okay? I want to learn about your tendencies. What do you see when you look at that chart? So email those. Get those to us. Perfect. All right, everybody. Yeah, thanks for your patience too.